Good morning, America. Thank you for watching Taxes Made Easy here on the smartmoneyculture.tv. Thank you for watching live or on rebroadcast. And again, today we're going to continue with operating a small business, some of the pitfalls, things you have to watch out for, and how to avoid tax issues while operating a small business. There's a lot in the news today. We're going to try to go through that fairly quickly, though, and kind of wrap up operating a small business, because tomorrow I really want to focus on closing a business, things to be aware of, problems that happen, and how to do this correctly to save you. Believe it or not, you can save a lot of money if you close out a business correctly, and it's important to do it right. So not only with the IRS, but with the state. So again, stay tuned, and we'll be right back after a little commercial break. Again, there's a lot of, I think, juicy news today. So we'll be back shortly. Welcome back, everybody. Like I said, we have a lot to cover. And I wasn't going to touch on this at first, but I do think we need to touch on it just because it's such a big issue today. And this is an article from townhall.com, and they are actually quoting an article or video from MSNBC. So it gets a little bit confused, but the article talks about how in Colombia you have all these protesters. Most of the protesters arrested weren't students. So I think this is very key. I mean, this is just a picture of the mess that's being left behind. When the cleanup after they're closing down these encampments is atrocious. And here at New York City, Mayor Eric Adams is sounding the alarm. I'm calling this out, but they're all part of organizations. I don't know if I would call them terrorist organizations. That might be a little bit over the top, but the article goes on to quote Mayor Adams, Mayor of New York City, how, again, these people are professional agitators, they're professional protesters, and so the word for the day is astroturf when it comes to these protests. They're funded. They were having food and water delivered to them. I mean, so essentially catered. These are not people surviving on the margins, willing to put their lives on the line. As soon as their identity was released, a lot of them, try to, get some kind of guarantee that they wouldn't be suspended or expelled. But most of the people there, and this goes on to, there's a quote in here from Charlie Kirk, and a post he made sharing an MSNBC article talking about this. Most of the people involved, they were part of BLM, part of Antifa, and now they're doing pro-Hamas. So it's just, pick your flavor for the day. Now, this hasn't been confirmed yet, but again, this is what Mayor Adams is suspecting. This is what we're seeing, that the vast majority of people being arrested and stirring the pot on these campuses aren't students. So it's interesting that this has really become kind of a professional career where people float along and then they just go and then they're part of these different riots or protests. BLM and Antifa both have participated in riots, breaking the law, threatening other people. And so now they're doing it with this they picked the new target, the new reason to go out there and protest and riot. Very damaging to our schools, very damaging to people around. And I think the universities are really going to be held to account. There's going to be all kinds of lawsuits flying here because people have a right. You pay, you sign up, and you're going to an elite institution. You're paying for an education. And the anti-Semitism that has occurred, forcing people out of classes, off campus, they're being threatened. There's stories of Jewish students having to be holed up in the library overnight or in a certain classroom because they couldn't leave campus due to all the protests and riots. And this is before the pro-Hamas started with these latest takeovers. It's really sad and scary, and it's not good for students. It's not good for higher education. Free speech means, yes, you have to respect others' free speech as well. Otherwise, yes, you're breaking the law, and that's not protected speech. Want to move on quickly here. So one of the concerns here is things are getting more expensive. We talk about inflation. Why is inflation going up? Why do we continue to have the costs going up and up? Regulations is a big part of this. So the Biden administration tried to attack gas stoves before. That failed. And now they're continuing to attack water heaters, water pumps, pool motors, light bulbs, furnaces, portable generators. They want to cut down on the use of fossil fuel and make everything electric as much as possible. The problem is these are a lot more expensive. So if you go further down the article, it talks about how on average for heat pumps, they tend to cost about $1,000 more up front, and they don't work as well in cold climates. So when you need them the most, they might not be that efficient. So I don't know how that's energy efficient, is when people are going to be running them the most. And you go to New York, you go to the Northeast, you go to the colder part of the country. If you have a heater that won't work, it kills people. So again, be aware. This is what's going on. And again, when we talk about increased cost, here's another interesting article. This is from UC Berkeley. They did a study, and so a new Berkeley study just came out. If they want to continue upgrading EVs in California, is trying to mandate force people to have to purchase EVs. They want to phase out traditional gas vehicles altogether. The problem is, to do that, our transmission, the electrical system and infrastructure is not up to par. So that's why they're saying we have to spend $20 billion on grid upgrades. It's a lot of money. Who's going to pay for it? Consumers. So again, 50% of feeding transmission lines will be overloaded. It's already a problem. And again, as they force these changes, it's going to cause distortions in the market. And again, energy costs are part of what's driving inflation. Again, so every time you have a new bill or a new idea, we need to consider the consequences here. California is already a very unaffordable place to live, and to make it even so only hurts the poorest the most. So, talking about affecting the poorest the most, one of the what's being thrown out there is tax the rich, tax the rich. So we're going to jump to a story by The Guardian. So I have two stories here by The Guardian. It's like they didn't talk to each other when they put these stories out, which I guess speaks to maybe some journalistic integrity here. But this first article, get a nice big ad up. Why are billionaires scared of Brazil's plan to hit them with a global tax? And this guy definitely is coming from a more leftist perspective. And they're saying the fortunes of the super rich are going up. And why are they going up? Because the super rich, they're not caught in a bind. As interest rates go up, they know how to move assets. They know how to take advantage of the distortions in the market that hurt everyday citizens they're not as mobile with their income. They can't move funds around nearly as easily. And so, unfortunately, when there's more and more chaos, it can benefit the super rich that are playing the system or know how to play the system, but it hurts the average individual. So this idea, he shows a luxury yacht owned by a Mexican billionaire. And they're saying, look, there's 3,000 billionaires. If we hit them with the 2% yearly tax, and this again, Joe Biden has pointed this out. If we tax them, again, right now they're saying they're paying on average globally about 8%, and he thinks that should be 25%. So again, Brazil came out with a 2% tax every single year. The problem is they have to have the G20 involved. They have to make sure that there's no holes globally, because there's plenty of tax havens right now where, and we're going to talk about that in the next article, people just take their money and leave. Bye-bye. You want to punish me? You want to come after me? They'll just leave. And so it talks about, the number of billionaires almost tripled since the 2010s. And there's solid public support for it because it sounds good. Here's the reality check. There's a long way to go before billionaire wealth tax becomes a reality. Not only, and again, I love how they bury this pretty far down in the article. One objection to wealth tax is they stifle innovation and growth. Absolutely do, which hurts who? The poorest. And they're saying the massive increase in wealth. So he starts his counter argument, but then kind of goes back and forth. Um, so they have to figure out how they're going to do it and do it uniformly across multiple countries, which is a huge problem. Countries that have operated wealth taxes in the past have found they raise relatively small amounts of revenue. This is the key here. When you go after the super rich, you target a small percentage of the population. These are the people that can easily say, forget it, I'm out of here. For the plan to work, there would be international cooperation to prevent capital flight. So again, like in the United States, like elsewhere, when we target the rich, there's plenty of other alternatives. And so we're going to share this next article, again, from The Guardian. Let's get that out of there. I'm moving. That's it. So this is in Britain, and The Guardian is a British newspaper. So entrepreneur Haidar, he's not quite a billionaire, but he's close. And he says he's out. He owns more than 10 properties in central London. He owns properties all across the world. And Britain is trying to get rid of this non-domicile regime. So basically what that means, it's allowed people to pay, avoid paying UK taxes, United Kingdom taxes, on their tax overseas income for the past 225 years. So he's lived there since 2010. He says, there's no reason for me to stay. Are you kidding me? It's gonna cost me millions and millions of dollars every year on money he's actually made abroad for businesses that he's built abroad. So United Kingdom is now saying, okay, and the United States, to an extent, does this. All foreign income is still taxable in the United States. But here in the United Kingdom, they've had this exemption, so people have moved to the UK. They've lived there, they've built there, they've put roots down there, but at the same time, they've invested in those countries because the money and wealth that they've built abroad hasn't been taxed by the UK. So people can argue that's unfair. Again, I'm not really concerned about fairness. I'm more concerned about what's going to happen. So he's already starting to search for his new house. Monaco is a tax-free principality. He's talking about going there. Dubai is tax-free. I mean, he can go anywhere in the world. He's like, what's the logic of me living in the UK when there's countries offering no tax at all? So again, you have to get, for what Brazil is proposing, what the G20 is proposing to work, and again, it's not constitutional to have foreign countries deciding our tax policy here. So there's a lot of hurdles to this in the United States. But he was born in Nigeria, has Lebanese citizenship. This guy, he's lived all over the world. And he said there's amazing alternatives, and I just went right into our break. So I'm gonna pause things and finish this up when we come back. Okay, sorry about that. Kind of went over on that last session. Just to summarize real quick, um, there's plenty of other options. Italy, Spain, Switzerland, and other countries throughout the world that offer very attractive deals. And he said there's just other ways to do this rather than just hitting people for millions of dollars in taxes for work and profits that have nothing to do with the United Kingdom. In Italy, they have a 100,000 a year scheme offered by Italy. They pay 100,000 euros, which is around just over $200,000 a year to keep their non-domicile status. And he said, I'd be happy to pay that, but I'm not going to pay 10, 20 million dollars on income that has nothing every single year on income that has nothing to do with the UK. So again, they've lived in London, but he said that they've lived in London for a long time, don't want to go. They love London, they love the lifestyle, but he already has friends leaving. And again, he's going to reduce his household staff. He's probably going to sell properties when he leaves London. And he says it's not when, or if he leaves, it's how soon can he leave. And most of them are leaving over the summertime, so moving very quickly so that their kids can be enrolled in schools and be settled in their new country where they're moving to. So, and one of the big arguments is that the government is looking to raise 2.7 billion pounds. I'm not exactly sure the conversion there, but that's not going to happen. Because not only when they leave, they're not going to pay those taxes. They're going to lose out on the income and gains tax and VAT, value added tax. So they're already paying fairly stiff taxes on what their UK income is and what's created there in the United Kingdom, moving through their spending in the United Kingdom. But it's probably going to cost, and what usually happens is revenues are usually very small, like the other article from The Guardian emphasized, or they lose money. So again, part of being informed financially is making and supporting wise financial decisions. Because when billionaires leave and they take all that money with them, there's no more investment, there's no more charitable giving. It leaves a hole in society that actually hurts the poor. And, again, I help the little guys, I help bigger guys all the time as well. It doesn't matter to me. We're all Americans, and everybody's struggling. And those that are really killing it and are successful, you know what? They're helping everybody else around them. So this idea of divide and conquer, we're going to attack a certain segment of the population, it's not going to hurt the rest of us, I think is very poorly thought out. Sounds good, looks good, yay, but when you dig into the details, it hurts more than anything else. So, going to our topic of the day for small businesses, the IRS came out with, IRS.gov came out with a couple articles, and it's a little bit of a twist, but this is very important information for small businesses to have. So we've got a lot to cover here for small businesses. And this is not just small businesses, but this also applies to individuals. And so the main thing, the first article is that came out yesterday is recommending safeguarding information in case of natural disasters. Happens across the country. It's such a large country. There are emergencies, disasters that happen every single year. So they're kicking off, again, we're heading into May for fires as we go into the summer, hurricanes, which are going to be later on, a little bit later on in the year, but they're telling people, get your documents in order, get your information in order. And so I see this every single year. There's all different kinds of natural disasters that happen throughout the year. And there are so many people that lose all of their information to fire, flood, whatever. And if you don't have backups, it can really make it harder for you to deal with your taxes. And while the IRS is understanding up to a point, If you lose all of your documents to prove up all of your deductions, your business records, um, there's nothing that can be done for you. So that's why using business accounts, working, if you run everything through a business account, those are all digital. And so you will have access to that information. If you have a box of receipts and it gets destroyed in a fire or flood, bye-bye information. So digitizing information and records will absolutely help you. And I've seen businesses lose information. So again, protect and make copies of important documents. I can't emphasize this enough. So tax returns, your social security information, marriage certificates, birth certificates, land ownership, and they, again, secured in a waterproof container in a safe space, or digitize them. And keep them in a safe and a secure location or in a flash drive for easy portability. So, or keep a copy with someone you trust that doesn't live in the same area of the country as you do. Again, for insurance purposes, keep a record of valuables. And this actually helps you, with property, again, get credit for that with the IRS. So it serves a couple purposes. With your businesses, you should definitely keep that information offsite, either digitally or at a different location. So rebuilding records, the better records you keep to start with, the easier it is to rebuild. And then talks about fiduciary bonds. Make sure your payroll service is prepared for a disaster, is prepared for a loss. I can't tell you how many times I have had payroll providers tell me that it was their work product and that they weren't going to give me my refunds or my returns. Or they just disappear and I hear from them again. So this is why every time a return is filed, you need to have those records. You need to make sure it's clear that you're going to get all that information from your payroll provider. And if you don't get it, they start disappearing on you. You need to find someone else and do it quick. There's always tax relief. We've talked about that throughout the year, different announcements for tax disaster. And again, there's a lot of different resources for that. So again, for operating businesses especially, you need to keep your information safe. You need to prepare for a disaster. And again, this is a different type of disaster that strikes small businesses. Fraud. So this goes back to protecting your financial and information, and also identity theft from scams. Again, phishing, spear phishing, they are getting creative. If you're not talking about with your staff, you should be. If you're not up to date on what they're, what's happening. So small businesses can be targets for Form W-2 scams, and they're trying to trick people into sharing sensitive data. And they're even targeting tax companies, so law firms, CPAs, etc. Why? Because they know they keep all that information. So again, it's really a huge problem here. Make sure informed. Credit card payment information, the identities of employees, and then tax and financial information. These are some of the big things they're going after. So again, it goes through lots of different information that they've been sharing. So how do you protect yourself? Make sure your software is updated. Secure business files. Have important files backed up offline, on an external hard drive or in the cloud. And make sure that you have your paper files secured. Again, passwords. Never leave your electronic devices in public places. Encrypt them and use a multi-factor authentication. It's a pain, but my new computer I got does that to me every single morning. And then again, it goes into more information on how to protect yourself, training the staff, have a plan, but also what to do if you are a victim of identity theft. So again, there's a form for that, and it kind of walks you through how to report that and protect yourself once it's happening. Try to stop the problem as quickly as possible, and then how to report it. So again, another scam. So again, the IRS does want to know. They're not probably won't be able to do anything about your case, but as you report it, they gather that information to go after the worst offenders and then try to give good information out. So the IRS is a partner here and trying to stop and help prevent scams. And I am pleased by how they've stepped up and tried to improve their customer service here. So moving again to the main topic, and this is kind of where we left off yesterday with business taxes, estimated taxes. We went through business taxes. We touched on estimated taxes. So again, people think that you owe April 15th. That is the drop dead deadline. So you are supposed to pay taxes throughout the year as you earn the income. But because you only have to file your tax returns once a year, people are used to doing that. The penalty for not paying your taxes throughout the year is to be slap on the hand, 0.5%. Nobody paid attention to it really. Now it's gone up to 8%. So, and again, this is very clear. It's a pay-as-you-go system or tax for federal income tax, and you must pay the taxes you earn or income you receive during the year. So you can either do that through withholding through your W-2 wages or estimated taxes. Now, there are plenty of CPAs that sit there and argue, don't pay them a dime before you have to. And the main reason is for interest. Well, right now, with interest rates more than most savings accounts, unless you have a really good investment, if you have your money in the bank, you're losing value on your money currently. So it doesn't really pay to get hit with interest on it. Pardon me, excuse me. And then, again, estimated tax payments just aren't for payroll taxes. You need to be on top of those. You need to be doing those at least quarterly. If you're a larger company, it could be every month or it could be every paycheck. But then you have to make estimated tax payments for business owners. So true story here. If a client making about $15,000 a month has a decent W-2 wage, and it's gone up, it's gone down with confusion in the market over the last 5 years. It hasn't been consistent and steady, which is why he's trying to figure out how to make this work. So they figured out at his work, he was a part owner, that they're going to take most of their income and put it back and rebuild their business back to where it used to be pre-COVID. Sounds good. The problem is that the IRS you're still taxed on your net profit. And if you put it right back into your business, that's fine, but it's still profit. So when they look at, when you do your personal return, if you have a small business, if you have a larger business, either through, it flows back to your 1040, either in the form of a profit and loss statement or Schedule C, or if you're doing it 1120 or 1120S, or if you are doing a K1. In this case, it's a partnership, and he receives a K1. So this last year, business income increased, and they were making millions of dollars previously. If they can get back to the point, it's not going to be a problem. But he has a sizable tax debt, and so they're not looking at just his income. So on the $15,000 or so that he's getting in W-2 income, he's paying taxes. That's all being run as W-2 income. The withholdings are in place. Everything's happening. But his net profit for the business is estimated at $300,000 for 2023. So if you take $300,000 and you multiply that. And again, that puts him in some of the highest tax brackets. Um, let's say, I think it's 27. Let's go with 25 just to be a little conservative. That's 75,000 in taxes he needs to pay on that $300,000 in income. And I'm being a little conservative with numbers, but that's an extra. The estimated tax payments he should be paying in $6,250 monthly on that 75,000. So the issue being here, he makes 15,000 after taxes. He's bringing home around 10,000 after other deductions. He's bringing home around $7,000 from his W-2 paycheck, and he's living off of that. He's comfortable. He's cut his expenses. He's doing okay with that, and lives in a high tax state, so things are expensive anyway. So again, he's not living high on the hog, but he has this net profit that he's not seeing. He's not getting throughout the year because they're reinvesting in the company, but it still shows up as profit on his return. So, and again, with the very conservative numbers, let's say he has to be paying $6,250 a month in taxes, but he's only bringing home $7,000. So the IRS is taxing him on money and profit in the business that he's not seeing, he's not realizing. That money is not coming into his hands, but he still needs to pay taxes on it. So as a result, he has to start taking money out of his business to pay the estimated taxes. Either monthly, but at least quarterly, he needs to start doing that. Because with this kind of tax bill, you add 8%. That's, plus other penalties and interest. It easily tax on another 10% or more in taxes. So again, it's becomes overwhelming if you get surprised by a very high tax burden. So again, I'm seeing this happen to plenty of individuals where they don't understand that not only do you have to pay estimated tax payments on your income, what you actually take out of the business, but on net profit as well. So depending on if your net profit goes up, you need to be tracking that quarterly. So this is why you really should have a program to track. You need to be on top of your expenses. You need to be on top of your income. Either have a bookkeeper or be using a program to do your profit and loss quarterly so you can look at it. I pulled my profit and loss from the first quarter. I looked at it. I said, okay, this was our rough net profit. And I paid taxes on that. I cut a check and got those estimated tax payments in. And we paid the IRS and state. The next quarterly payment is June 15th. It's only for 2 months, but again, that's the next date here. So be aware, stay on top of your estimated tax payments for you and your business. And this is how you stay out of trouble. And this is something that I've seen too many people not fully understand, and it's created a lot of problems. So employment taxes, again, you do not want to fall behind on employment, Social Security, Medicare, federal unemployment tax, FUTA taxes. You have to stay on top of those. The IRS is very aggressive about those. And those one of the few taxes that can be assessed to you personally. We talked about self-employment taxes. So like I mentioned before, the biggest taxes to watch out for: self-employment or no employment taxes, and also sales taxes. So we're coming up on another break, and we're going to try to wrap this up. Again, there are plenty of issues to be addressed here, but we'll come back right after the break and hit those. So thank you for watching, and we'll be right back. Hubert Johnson here. Just again wrapping up. Thank you for watching and sticking with us. Some of the things that you need to do as a business is when you discover a problem, you need to fix it. Don't try to ignore it. That's one of the worst things I see people do, and things can be very confusing. So again, this article right here, this section. You can e-file all these forms, but which forms do they? I mean, it's just like, oh my goodness, what do I actually need to deal with here? So I'm just going to go through these very quickly, and these are employment forms. You can do them. It doesn't even go through the different types. So the 940 and 941s are the primary returns that you'll be worried about. Make sure you know what your CPA is doing, or your payroll person, because most CPAs aren't touching payroll anymore. Too much liability, not enough reward, too much work, it's not worth the hassle. 943s or for farm payrolls. So unless you're working on a farm, you shouldn't be filing 943s. So your 940 is a yearly return, your 941s are quarterly. And then your 944, all it is their 941s in a yearly return. If you're a small enough business, you can file a 944 instead of a 941. But be aware, like I said, it's very important that you're aware of what your payroll person is doing if they're doing the 944s or 941s. I have a case right now where, again, there were a lot of issues. The owner didn't have a clue what was going on, came to me and said, look, they're a friend. And they said, I need help. Can you fix this out? I got on the phone right away with the IRS. The IRS couldn't make heads or tails of it because they first filed 941s, then they started filing 944s, and now they're going back to 941s. And nobody knows what's going on because you've had multiple people filing these returns and creating a mess at the IRS. So whatever you're going to do, stick with it, make it simple, and just most of these other numbers, it's confusing that the IRS just lumped them all together. But these are all payroll forms that you would use. But again, the first two, the 940, 941s, are what pretty much every business is going to use. And as your business grows, you're fine just to stick with those two forms. Ignore the others. You'll hardly ever use them unless it, like I said, for the 943s, those are for farm payrolls, and then you should never be filing 941s and 944s. Pick one, use that, and again, if you plan to stay small, the 944 might be the best result for you. Filing past due returns. There are plenty of reasons for doing this. Number one reason is that, again, with states, and again, if you have state issues, they will hold onto a case for as long as they can. The expiration dates on, so for states, I have a case right now. We were talking about 2006 tax issues, and I had a power of attorney going all the way back to 2006, and they told me it's not broad enough. So I had a conference in the claim, get permission to go even further back. We even went as far back as 2001. To get them the information that they needed. So again, it's crazy. You'd be surprised how far back things go. So when I tell you you need to keep your information for at least 10 years, there's a reason for it. But make sure everything's filed and that you keep copies of it. Believe it or not, when you file something, half the time they lose it. Yeah, probably not that high. But if you're filing paper returns, they're very good at losing stuff and not processing them. So you have to make sure that you have the dates, keep proof that it was either mailed, sent certified to them, but even better yet, again, if dealing with the states, if you walk it in and you get it stamped received, or if you have proof that it was e-filed, that's ideal. When you find out there's an issue, don't wait around. We always prefer that clients jump onto cases and start addressing issues earlier rather than later. Why? Because things get messier the longer you wait. Then the IRS is coming after you. I mean, we have a case right now. I just spoke to him where they're getting hammered, they're getting levied, their bank accounts cleaned out. Um, and again, that's just the start. It's going to get worse. And it's all because they haven't filed original returns. And we've been working with them to get their original returns filed. And it's gotten to the point where they've taken too long. The state has lost their patience and they're just going after them. So again, it's better to get those returns filed. Make sure you're not overpaid in taxes, and then you can turn around and deal with the issue at hand. But get good tax advice, because again, if you're filing older returns and the IRS hasn't assessed anything against you it's older than 6 years, they usually can't. The states can. So you have to look at both sides of the coin there. Payments to independent contractors, you have to use Form 1099 MISC, or it can be disallowed. So one of the big issues, I have a client right now, has been using someone, they've been working for this individual for a long time, but they're not here legally. So they're paying them, around 50, 60,000. I'm not sure exactly how much. I'm not sure they're sure how much. But paying them in cash under the table. And all that money they're paying them counts as profit, and she's taxed on all of it because she can't write it off. So that's a problem where you're working with someone that it's not legal. If they have their own company and you want to give them a 1099 as an independent contractor, that's fine. But make sure they're actually working as an independent contractor. Plenty of issues and problems here when this isn't done correctly. True story, I had a case where this was a farm situation where the owner took a shortcut, and I guess the one worker was the one person that spoke English and Spanish, so the owner gave him the whole payroll and had him pay everybody. So everybody got paid, but the owner issued a 1099 to this individual farm worker. Turned out the IRS processed the 1099. They claimed he owed over $1 million. And then the individual worker was like, oh my goodness, all I did was hand out the payments because I spoke English and Spanish. That's all I did. I didn't, this wasn't my money. But he didn't know that, again, if it was done legitimately, watch out for funny situations like that, because someone's going to get burned. And then last topic here before we wrap up for the day, have a succession plan in place. Have a plan in place for if you get sick, if you become unable to handle your situation. This talks about deceased taxpayers, but again, you really need to throw in here when someone loses capacity. So this is where you really need to talk to an estate attorney, ideally if they have a corp or corporate attorney, to make plans for when you become either incapacitated or someone else needs to take over the business, or you want to retire. So this isn't just about deceased taxpayers. You want to make sure that you pass things off correctly. If you want to sell the business, you want to make sure that you're not buying a host of issues. You want to make sure that if you're passing on, especially to your children, that you don't leave them a mess. And we see this way too often where people pass away. And the question is the business going to continue? Is it going to be an ongoing business, or is it going to crash and burn? And a lot of that depends on your preparation going into it. I've seen, one case, this was a chiropractor who passed away, owed taxes, hadn't filed, was behind on the filing taxes, and it was a giant headache. And guess who had to deal with all of it? His widow. Instead of being able to mourn and grieve the loss of her loved one, she was mad. She was ticked off because he left a big mess for her to deal with. Is that really what you want to do to your loved ones? And that's can be fairly typical. Happens more than you would think. Another case, though, was a gentleman was a jeweler, had plenty of assets, and the jewelry business could have continued. But because there wasn't a plan in place, There wasn't a good inventory of the jewelry. Again, it had to go through probate. The IRS was involved because the taxes weren't paid. And again, his daughter, instead of being able to grieve and focus on missing their loved ones, was dealing with a giant IRS issue, dealing with a probate issue. They had to deal with all kinds of legal issues and headaches. A lot of an ounce of prevention is worth a pound of cure. Absolutely true when it comes to dealing with taxes. So have a plan in place. Be prepared in case something happens, and know what's going on with your payroll person. If you don't know what they're doing, one, you should ask, get a little educated, or you could always refer to another professional. Again, get a second opinion. Is this being handled correctly? Can you talk to my CPA? We'll do that all day long, and we can just do a consultation and speak to them, review them, look over the information, and say, okay, if you're concerned, if you think there's past issues, we can always dig into it. So if you have questions, give us a call, 520-485-7371. Our email, again, is guardiantaxlaw.com. You can look up these videos on YouTube, our YouTube channel, and there's so much that small businesses need to deal with. I mean, it's just, they talk about, a mother in the home. They have to be a financial guru. They have to be a cleaning expert. They have to be a maintenance expert, fix things around the home. They have to, provide childcare. They have to be a cook. There's so many different things they have to do. So many different hats they have to wear. Same thing for being a small business owner. The problem being that if you don't understand your hats, if you don't know what each thing, you don't have to do it all. You shouldn't have to do it all. But by building a good team around you that will keep you informed of what's going on, it can protect you, it can help your business, it can avoid a lot of tax issues so that you can focus on what you enjoy. That's why you created your business, so you could do what you enjoy, what you're good at. Most people don't create a business in an area that they hate, but there's plenty of business owners that get rid of a business because it's too much headache, too much hassle. And again, the worst part of that is that it can be avoided if you get good professionals around you. I've shared this story before, gentlemen I knew. But I love this story because it is so accurate. He owed, he had his wife helping him with his bookkeeping and paying sales tax, estimated tax, etc. She didn't know what she was doing. She was doing the best she could, but she wasn't an accountant. And instead of getting good tax advice, he ended up owing $250,000, roughly $150,000 to the IRS, $100,000 to the state. He brought me on board and said, hey, it's a friend from church. He's like, I need your help. I came in, looked at it, said, well, do you have a CPA? And he had already gotten a CPA. So we started working with the CPA. I pulled all the information from the IRS to get the tax returns done, to get everything filed. We got a business attorney for him to help straighten out that part. And by the end, he had a CPA, he had a bookkeeper, he had me as a tax attorney, and then he had a corporate attorney. And you would think, oh my goodness, that's so expensive. Well, my fee is a one-time fee. We tried not to break the bank. But having a good CPA and bookkeeper and then a corporate attorney to help them down the road really helped him out. He was able to take all this burden, stress off of his shoulders, and he just went out and worked. He got another crew going and worked and paid it off within a year or so. And he was able to, and then after that, he realized, oh my goodness, now I know where my numbers are. I know what I can do for my family. He doubled the size of his family home, landscaped his property, and he had the money to do what he wanted with his family. And really made a huge difference in his life. So if you are a small business owner, you're trying to do it all by yourself, get good advice, get good help, but you should be informed of what you do along the way. So I did a podcast national podcast a couple months ago with a financial advisor. And it was funny that I was talking to him and I was talking about some of the things you should do. And I said, never just sign a tax return. You should at least look at it and have it explained to you. It's like, well, I do that. I just sign it every year. I don't know about the details. I'm like, well, you should. Because we've seen plenty of tax preparers, other professionals. Just because you hire someone doesn't mean you should trust them implicitly. You should always verify. And if something starts to smell fishy, go get it fixed. Because if you fix it quickly, it's not going to blow up into a much bigger problem. So again, avoid a lot of these issues. If you do this right, you'll never need me. We joke around that if you do things right, you use, and this is part of what we do, is we help people get on a path so they won't need our services in the future. And, jokingly, but also seriously, if we do our job right, we don't get repeat business. People come into us in need. There's a big problem. We address it. We clarify, but then we set them on a path with excellent professionals to help them and their families and their businesses know exactly what they need to do so they're not right back in the same situation. So we'll see you tomorrow and have a great day.